Hey, how you doing, friends? Ernie here, and this is the final hour to expiration. Zero DTE on the SPX, options on the SPX, and we're here to see if we can make a trade in that final hour, usually in the final half hour or so, but we'll do a little bit of analysis and check out the market and see what happened today, see how our trades went. I am back in my office, back from Martha's Vineyard, and hopefully, actually, I'm very sure that this stream won't go down. The internet over there is horrible. Okay, so today was a very unusual day. The market was extremely oversold, unbelievably oversold, and you can look at today's rally as sort of a pressure release. Nothing more. So today we had a trade on, and I expected it to move up. It was one of my scenarios to move up, and then if it did, to go to the top of the volume node and then move down. I had an alternative scenario that it might go even further, and it just kept on going. It kept on going. No news. There were several Fed governors that talked today. I mean, none of what they said, there was no correlation between what they said and seeing the market go up. I think it's like one of those days where it doesn't matter what news there was or what happened in the past, what they think of the future. The market had to have that release. And that's what happened. The market went up pretty strong. A nice big fat green candle. And so that invalidated our trades. I know that one of our traders had picked the bullish direction. I had picked going up and then reversing back and then taking the bearish position. So that ended up not being a successful trade. And let's see here. Let's go to the charts. Oh, those are my hands. Those aren't the charts. And let's see what we can do about that. Hold on. And the charts. There we go. Yeah, that's a pretty strong day. So my original analysis was to go up to the top of this volume node, which is outlined in this shaded area, and then come down, perhaps landing somewhere around 39.20. But obviously that didn't happen. We had some things like it, but then it just kept on rising. So there was really no hope in that trade. Now, we've passed through one LVN. An LVN is a low value node, or I like to call them LVLs, low value levels. And those are significant because when the market passes through them, here, let me see if I can bring this microphone a little closer like that. There we go. When the market passes through an LVL, it will typically continue until it reaches another node or another LVL because it's in a very low liquidity zone. All of this area above the value node is relatively low liquidity to the value node itself. So it moves up, hits that LVL, it either gets rejected or passes through. That's the typical behavior, and then will continue on, which it did. Now, question here is, will it find resistance here on this LVL and get rejected, or will it continue through to what is next? And if we move back in time, let's see, let's go to a 15-minute chart so we can see that. Oh, I might have to go a little further out. There's a 45-minute chart. You can see there's another value node up here. And so that's a long ways up. So this is a very low area of liquidity up here. So if it does move beyond this minor node here at 39.85, then we could see it move up a little more quickly. But I suspect that if it hit this LVL here at 40.44, that is shown to be a very heavy-duty area where there's lots of orders above and below. I suspect that it will get rejected. But for the time being, while this is a strong move up, it's not terribly much stronger than any other move that you see here. And it looks to me like this is probably a one-off deal, particularly when you have the news that kind of started this whole move down, where Jerome Powell essentially declared that we are in for a great deal of pain. And that's going to come over time. The next meeting that they're going to have, I believe, is on the 21st of September. They are planning on a 75 basis point hike. And then the next meeting, they are doing another 75 basis point hike. And I believe they're going to continue with that program until inflation starts moving down. Now, I expect that when they do that, that's going to put tremendous strain on the economy. People are going to lose their jobs. Markets are going to fall. Lots of mayhem. But it's not going to affect us, to tell you the truth, as traders, because we have very little exposure in the market, very little, practically no exposure. Yet we can, through our strategy, we can pull a lot out of the market, particularly in down times when volatility has risen or is on the rise. So that's like a nice recipe for us. All right, so now the question is, can we find a place where price is going to settle in the next 37 minutes or so? And if I had to choose here, this is a difficult question, because when you have really strong moving days like this, it is, and when it's just a reaction or maybe a dead cat bounce or just a pressure release or whatever it is, this is a very difficult time to try to make any kind of prognostication. So if I had to guess, though, I'd say that coming back down to this 39.65 area is probably where we'll end up. But this is a fairly prominent node in this scale of things here, right at 39.84, 39.85. And it's entirely possible that this is where we end up, and then continue moving down, much like what happened over here on, let's see, that was September 2nd. Yeah. From September 1st to September 2nd, we moved up very sharply and then gave it all up, and then the downtrend resumed. So I expect something like that to happen.
New visitor.
I mean, this is a pretty strong move off the top of the bear market rally. And it's not unlike, like I said, it's not unlike any of these other pressure releasers. And we've been going, let's see, 1, 2, 3, 4,
New
5.
visitor.
You got to be quiet over there, okay? So in terms of weeks, I think that we're in, I don't know, 4 straight weeks of downtrend. And I expect that to probably continue. No reason not to. I mean, the news is horrific, and there is no pivot in sight. I believe that the mainstream media and Wall Street are hoping for the Fed to pivot, but I think Jerome Powell made it very clear in his meeting, where he spent only 8 minutes and took no questions and basically said what he had to say. Now, I did not review the 3 Fed governors that talked today, what they actually said, but I didn't see any correlation between what they said and the market moving. So I get the feeling that it was mostly lip service or special events that they attended. And so I don't really expect a whole lot. Maybe out of Brainerd, you would think. And it's possible that this last surge was because of him. I don't know. Let's see if we can find that out. We'll go to Forex Factory. And Brainerd was speaking at 12:40. He's talking about crypto? Why talking about crypto? We're very focused on housing sector. Oh, there's all kinds of bringing inflation down. I'm sorry, I kept on referring to Brainerd as he. Uh, Over the past year, inflation has been very high in the United States, around the world, blah, blah, blah. High inflation imposes costs of households, yeah, 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 yada, yada, yada. Um, so we really haven't heard anything from Brainerd for quite a while on the economy. So I don't see anything here. This is, like I said, lip service. Basically a repeat of everything that everybody already knows. Wow. So she said a lot of nothing, essentially. We're in it for a long. We are in it for as long as it takes to get inflation down. So far, we have expeditiously raised the policy rate to the peak of the previous cycle, and the policy rate will need to rise further. As of this month, the maximum monthly reduction in the balance sheet will be nearly double the level of the previous cycle. Together, the increase in the policy rate and the reduction in the balance sheet should help bring demand into alignment with supply. When they say help, that means that they might be able to chip away a tiny, tiny bit because it hasn't really changed all that much. Monetary policy will need to be restrictive for some time to provide confidence that inflation is moving down to target. And of course, the target is 2%. The economic environment is highly uncertain, and the path of the policy will be data dependent, while the precise course of action will depend on they're always giving themselves an out, on the outlook. I am confident we will achieve a return to 2% inflation. Our resolve is firm, our goals are clear, and our tools are up to the task. So no matter how much they express their resolve, I doubt that they're going to be able to achieve their goal. This is the result of 15 years of bad policy, and it has to unwind. The market is extremely overvalued, and it's all because the Fed has been pumping money into it for 15 years. There's no getting around that. Well, 14 years. So, all right, let's take a look at the market again, and it's still rising, man. It is still rising. What do you do with this? Look at this. It's now broken. It's almost broken through completely through the LVN at 39.85. All right, let's back out a little bit. We have Alan online here. I'm sure that there are many others. If you want to say hello. If we move beyond, I think, this level here at 4,000, there's a good chance that we could make it up to 40.44. But I don't think that's going to happen today. Yeah, this is a toughie. Where are we going to end up in half an hour? Aaron says, my butterflies are at 39.90, hoping for another pin. Yeah, Aaron killed it yesterday, so let's all watch what Aaron does. How you doing, Gen 6? Yep. Aaron got the call right yesterday, big time. Yep. No. It's good exercise of the strategy. That's what it was. Of course, it's all luck, but we make our luck too. All right. Man, this is right now, as much as it was overextended going to the downside in this pressure release, I look at this day as being super extended here. And I think what I would do is if we make it up to this 4,000 area, I would probably set something down a little bit below that, maybe 15 points below. But I don't see any other real opportunity here. This is definitely the toughest type of thing to trade in the final hour. So, and I know that this is going to get old, but we've done this now 11. We've had 11 times where we have taken a pass on a trade in this second half of the 100 trades that we're doing. So we did the first 50, and I think there were a total of 8 or 9 passes where we didn't trade that day, and then the rest were wildly successful trades. And then on the second half of this journey, we're now on trade or attempt number 31, and we already have 11 abstains, right? So 11 times that we have not taken the trade, and this will make 12. I don't know, unless somebody in the peanut gallery has a better idea. Aaron's already all set at 39.90, which is all great, but we can't put that trade on right now. It's just too close. I don't know. Let's see what happens. All right. Let's see if we can put something on there. Yeah, this is the trade that I had on. Look at it. It's sitting way out here. At one time it was touching that, it was like touching that front leg here. And now it's like way out here. All right, let's see if we can turn all of this off and add a trade. Where would we add it here? Jeez. We could be going down to here. Maybe we could meet up with the edge of this node here. So let's say 39.74. Is it possible to put on a fly at 39.75? I'd have to go here, 39.70. Then we can get everything that we're looking for, say 10 wide, and then our near leg is at about 70% probability of touch. All right, so let's try that. See if we can get a good price. It's pretty expensive, but not too bad. If we can get it at like 135, I think it's too expensive. Let's see, 125. What would that give us for a risk to reward? So if we went 1,500 minus 125 divided by 125, that's 1 to 11. Wow, how is that possible? That doesn't sound right. Oh, it's not 1,500. It's 1,000. It's a 10 wide, not 15 wide, Ernie. Come on. 1,000 minus 125 equals divided by 125. It's a 1 to 7. That's not bad. So we could try. Is has a comment. Let's see. Is saying we'll pull back to the 60-65 area. It would be nice to pull back to nearly 39.50. Would make my cheap 15 wide butterfly pay out nicely. We can all dream. Oh, look, it's starting to pull back already as I was speaking. Ugh, am I too late? I don't know that I want to risk that. I will risk $1.25. Oh, I can't believe I'm so late. And just talking just for that couple of seconds. That's what I want. I want $1.25. Let's zoom in on that area. Yeah. I mean, when I took the trade, when I started entering the trade, we were up here and it just dropped very quickly. Can't read it. It's blurred. I wonder what makes this blurred. Maybe I can. Tell me if that looks better. Does that look better? $39.70 has highest open interest, says Richard. And Kevin sees it fine. Everyone has a different view. Some YouTube, if you go to the gear icon in the lower right hand of the video player, you can choose a higher resolution. Aaron says, earlier in the day I had a butterfly at $39.55, but I fat fingered the take profit order and ended up selling them all off for only a very small profit. Well, it's better than a loss. A fat finger order, I can't tell you how many times I've done fat finger orders, and I've got big fat fingers, so they were big orders. So. It has not worked out for me in some cases, but I have a general rule when you enter a fat finger order or something that you didn't intend to do, and that's to hold your nose and just close the trade. All right. Are we going to get the price again? No, it's still not there. Wow, it's $1.95. Man, that changed so quickly. Well, I saw it. I saw $1.25. I was going to set it up and take it, but it just moved too quickly. Let's see if we can analyze that trade. Yeah, see, now it's sitting right here. Darn, just too slow, I guess. All right, so Edwin wants to know if we've ever considered a broken wing butterfly. We've done more than consider broken wing butterflies. We have traded them extensively. And the broken wing butterfly comes with a caveat to it. While you think that by having the near spread being a little less wide than the long spread will reduce your cost basis or reduce your risk, it actually doesn't. It actually increases your risk. And that's because you may be putting that broken fly on thinking that you're going to be getting into a trade cheaper and that the risk part is too far away for it to ever impact you. And what I'm telling you is that eventually it will impact you in the same way that you could put on an iron fly and say that, oh, I made it wide enough and it's a 5 delta and there's only a 95% chance I'm going to profit, blah, 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 until you don't. And the same thing can happen on a broken fly. And in fact, we actually got burned on 2 flies where the risk part was more than 3 standard deviations away from price. And in the course of 1 week, it hit that 2 times. And that was a real killer. So we will not ever trade another broken wing fly. There's no real reason to. It goes outside of our philosophy, everything about it. So from now on, for us, well, since then, it's symmetrical flies. All right. Well, I obviously missed that entry by a few seconds, probably because I was answering a question, which is really what usually happens. I turn my head, I answer a question, I come back and blah. Or, here's another way to miss trades. This happens a lot. My wife will come down and ask me a question, and of course she wants my attention, so I give her my attention. Then I go back and I look at the trade and it's gone, or my opportunity to profit is gone. Not that it's her fault or anything, because it's not. But that was the trade, I think, that $1.25. It's moving back a little bit, but there's no chance. And if it does go back to $1.25, I wouldn't take the trade now because it would look very different now. Yeah. See, originally I thought, well, maybe it will come down as far as 39.70 with 17 minutes left. Yeah. So Edwin, let me do an example of something like this. Let's say, okay, we have this market here, and let's say that I wanted to put on a broken fly here in this situation. I don't want to risk anything up front, so I'm going to put it on so that the short strikes are closest to price, and my risk is all the way down here at say 39.56. And you can put on a fairly good-looking trade. So let's take this guy here, and the way we're going to broken wing it is we're going to take the strikes that are furthest away and make them longer, like this. And of course, what that does is it makes this over here, the leg that's closest to price, much less expensive compared to the other. So let's go even further out. Let's make this at 65, and then we'll go to, I don't know, like 70. I mean, I could even, yeah. Yeah, that might be extreme. All right, so here's something like this. So here on the near side, you've got $125 of risk. That's what I was looking to get into before. So it's almost, a similar trade with about the same kind of potential profit because it's only 10 wide on this side. So it looks just like my other butterfly. And the reason why I can get the better price now is because, well, I'm moving further away, and I also am taking away from some of that profit on that side with this larger spread. But the spread on this side is $600. So really, on this side now, my risk to reward is no longer 1 to 9 or 1 to 7 or whatever it was. It's now more like 1 to 1.2 or something like that, almost a 1 to 1. And yeah, even if you put no upside risk, it's the same deal, right? So let's say that I move it back a little further and I go like this. I don't know how far back I can go. Well, it doesn't matter now. We're too late in the game. Oops. flipped it. Yeah, sometimes you can actually put it up here and you can get a credit if it's early enough in the day. It still doesn't matter. You still are sacrificing that huge risk on the far side. What happens if price all of a sudden just drops and too fast for you to actually react to it? Well, then you're going to suffer a huge loss. So there could be a case, Edwin. Imagine this: that it's you have a fairly wide spread on something like this guy here, and price moves right inside your profit tent like this, and you're saying, "Oh man, I love the way I'm managing this trade. I'm all set." And then all of a sudden, it drops to say here at 39.37, and you're saying, "Well, I'm still at no, even Steven. It could still move back here." And then before you know it, while you're sitting there thinking you can manage the trade because of the gamma risk, price is moving up, this is moving away, you're in the negative, and then it drops down another 10 points, and now you're here. And you say, "Oh, I thought it was," because you're hoping that you're going to be able to come back into the tent. Now, if you just have the lowered risk like this from the get-go, you have really no problem with this trade, right? The lure of the small upfront risk is just that. It's a lure. And yeah, and that's exactly right, Gen 6. Once the gamma takes over, and you're thinking, "Oh, I can wait another minute, maybe it'll move in." In like 2 seconds, it could move 10 points down, and you go from even to like $300 down, and then you're saying, "Oh, now what am I going to do? I could hold on here and potentially suffer a max loss of say $600 or $700, or I can hold on because all it has to do is move up another 5 points and I'm good." Then it just keeps on moving down. uh, Matt McBroom is declaring a price for the end of the day, 39.87. So is saying, "Ernie, go the other way. Put the risk and max profit in the other direction. Sell it for a credit. Small credit for sure, but if the trade goes against you, then you still have the risk on the other side. No matter what you do, you have the risk on the other side." Like this. I mean, right now, this is a halfway decent trade. No, I have there like that. But that's because it's the end of the day. Only cost me 20 cents to get into this trade. And so if I have a flash move down, I can make some big money. But the only time you'll ever see something like this is when there's 10 minutes left in the market. Uh, Matt at 39.90, I think Aaron is waiting for something similar. I think he has 39.55, or was it 39.90? Let's see. You must mean a 39.70, Richard, not a 37.70. That's okay. You can sit back and be happy with the thousands of dollars you made yesterday, Aaron. That will provide a nice boost to your equity curve. My advice, though, is just don't get too full of your britches and think that you're going to go all, heavy duty going in, because as fast as you can accumulate that, if you start over trading, it's very easy to give it up. That's why, with our strategy, it's all about trading small within your risk, and then every once in a while, you're going to hit those big ones. You're going to pin. It's about 10 to 15% of the time. Just follow the formula that we have, and like clockwork, about 10 or 15% of the time, you're going to hit those big ones. Let's see, 7 minutes left, and there's no chance. Where's price now? That came all the way back up. I actually had a chance to get back in, huh? But anyways, it looks like 39.80 is going to be right around there. There's the 39.81.75. I believe that is going to be the ending of the day, or somewhere around there, within 5 points of that. Strong move up, grind up, move sideways. This is where everyone's taking profits. We might get in the last 3 minutes, a sharp drop. I've seen that a lot. So looking at this other trade, by the way, I mean, a 5 cent, how close can I get? And at what price? Let's go to 75. Can I go to 80? Is it worth 90 cents in the last few minutes? Let's see, how much can I get the price down? Sometimes if you're expecting a little flash move right at the very end, you can get really close to price and get it to give you something. Let's see. I don't think that it's probably not worth the risk, because if it goes the other way. Yeah, that's absolutely right, Richard. A lot of people, we we examined looking at the high volume strikes, and every once in a while it hit them, and then other times it just completely avoided them, or it would sit on them for a while, and then at the last few minutes it would move like 2 or 3 strikes away. It's the same deal with people looking for max pain, right? So they'll look for that specific level where there's the maximum pain for between calls and puts. and it's not a viable strategy. It sounds good in theory. But so just as a recap, today is a no trade. That will, let's see where that will bring our totals. All right, we'll go here. We'll look at the, so currently we've done, this is going to be our 31st try, 31 out of 50. There are 7 wins, 12 losses for 37%. It'll change to 12 no trades. So we've had as many no trades as losses. And our range of returns, we had a big return on the very first trade, actually. Very second trade, I think it was, have ranged between 20% and 357%, or 367%. We're currently sitting at $47 profit. So after 19 trades, it's gone up and down, but we haven't gone anywhere. We haven't really lost anything. For a while, we were sitting a little bit below zero, but really hasn't gone anywhere. The first 50 trades made a ton of money, but these last 29 trades, 30 trades have just been not giving it up. So I don't know, maybe with 11 or 10 more trades to go. Let's see, how many trades? I'm sorry, more than that. 19 more trades to go. Maybe we can pull it out and have a few big winners and declare the second half of this experiment a huge success. I wouldn't call it a complete abject failure, because the first half made tons of money. The second half didn't lose, didn't win. So we'll see. Now on our service, on the other hand, that's been doing fantastic. That has been off the hook. Let's take a look at that. So this is actually my my personal or reference account for the strategy. Today was a little lost, so that will come down a little bit, down to right about there. But so far, averaging about 8% per month. But I expect that that's a little bit high in the long run. I mean, it would be wonderful after 12 months that if I averaged 8% a month, that would be almost a double in a year. But the expectation should be probably something closer to 4 to 6% per month. And then to be able to do that month in, month out, year in, year out with this size account. Now, next year, I think I'm going to I'll have as a reference account a 6-figure account. So that's how I'm graduating this whole service. Last year, I did a 4-figure account, tripled it. This year, I'm doing a 5-figure account, and then we'll see how high that goes. Maybe 50%, maybe 80%, I don't know. And then next year, I'll do a 6-figure account. We'll see how much we can build that up. But so far, we have I've only had a max drawdown of 3%, and we're up about 18% or so, 17%. Here's the important part right here, and that is the distribution of returns. And you'll notice 0 is right here. we have slightly more small wins than small losses, but we only have small losses. And then we have medium-sized wins and some big wins. And that's what really makes the account. So we essentially break even with the small wins, small losses. And then where we make money is on the medium-sized to outsized wins, or what we call a fat tail. And that's the key to this strategy. Let's see, got a comment here. With seeing how much those trades cost, anywhere from 120 to 250, what is the minimum amount someone could start an account with? You can easily do an account of, say, $2,000 or $3,000, but let me leave that with a caveat. I have looked at. I have a simulator here that simulates everything about the trade, and I have looked at small accounts, big accounts, so forth, and what their relative performance is. So every time I run this simulator, I can. Let's see. Let me make it bigger so you can see. I can simulate 3 different traders, and with the trader number 1. If I start at, say, $3,000, I make a cutoff of, say, I'll make a cutoff of 1,500. I'll say that that's a failure if you lose 50%, right? Now, if I recalculate that over and over again, you're going to see that there's going to be a number of times where it's going to fail. No, it's not failing yet, not failing yet, not failing yet. Oh, this is amazing that hasn't failed yet. Probably because I went to $1,500. When I go to $2,000, I don't know if you would consider that a failure. Let's see if we can. So in other words, if we have a drawdown where it brings us down below a 33% loss, I would consider that a failure. All right, so there's one. So how many times did I click that? I mean, it took me a while to get to one. And it could be, it's because I have set the profitability too high. So I made the win rate at 50%. I would assume like a 45% win rate, right? And let's see how that works. All right, 1. All right, first one, failure. 2, 3, 4, 5. All right, on the 5th one, 2 failures. That's 3 wins, 2 losses. 6, 7, 8, 9, 10. All right, so 30% of the time, at least on this pass. But if I did it 100 times, you'd probably come out to about 33% of the time where a $3,000 account will draw down below $2,000. All right. Now, a $5,000 account, I think, is more reasonable, because at a $5,000 account, it'll take quite a bit. You would have to draw down. Let's see, what would be the cutoff? You have a good idea of a cutoff where you figure if you started with 5,000, what would be your failure? I'm going to say 2,500. Let's say 3,000. That's losing $2,000, right? And so let's do that, say 20 times. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Now notice there are some drawdowns, but eventually it kicks up and goes, higher. 13, 14, 15, 16, 17, 18, 19. Now, amazing. We went 20 tries, and it never started out losing, early on. Never got below the $3,000 mark. And once it gets above that, then the higher it goes after 5,000, the less likely, if you trade just one contract, the less likely you are to, to break it. So the risk, we hardly ever go to 250, although I put it up there as 250. Actually, here I have it set from up to $190. But I also have the max winners a little lower than expected too. So that's only at a 45% win rate, and all the fees are accounted for in this too. So what I found though is that once you get above 5,000 and you are, now this is assuming of course that you're trading it, right to script, and that you're not making any mistakes, because there could be mistakes. So bring the max winner. No, see, the max winner isn't at 400 though. I mean, because most of the time, I mean, if you just look at my returns that I've had, I think the 700. Well, okay, we'll do it. Let's bring it to 400. But see, now you'd have to say you're gonna risk less too. So I would say bring that down to 125. Never take a trade bigger than that. And with $2,500 max drawdown. All right. Starting with $5,000. All right. All right. We'll start here. What's going on here? It's all losers. Why is that? There's something wrong here. Oh, because I have the cutoff at 25,000. Oops. All right. Let's start here. All right. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It comes close. 13, 14, 15, 16, 17, 18, 19, 20. So we went 20 instances on those really draconian setups that you're talking about, with a 45% win rate and only a max winner of $400. And you know that there's actually going to be a max winner that's going to be much higher than that. Well, it said the largest winner was $370 and the largest loser $131. So there you go. Even with really, I mean, and these are unreasonable numbers. We don't, because that's assuming that you're never putting on more than a 10 wide or a 5 wide spread, maybe a 10 wide, but we often go to 15 wide and 20 wide spreads. Yes, the Excel sheet is downloadable. I have them in the Discord under the pinned menu. That's 500 trades, Serve and Grow. 500 trades. So it's simulating, and it's simulating the distribution, the skew, the kurtosis, everything. I've fixed the distribution randomness so that it perfectly matches the way I trade. So yeah, and that's generally what I found. You start with 5,000 and you're good to go, and it just grows from there. Now I started with 23,000, and I obviously haven't had any problem. And after 70 days, I'm up about 17%. And that's never trading more than, say, 1% of my trading capital. Never putting at risk more than 1%. Usually putting much less risk, usually around 0.5% to 0.75% in my positions. So if you looked at that, I'll give you, what I'm See, I've done 50%. Let's make mine 50%, and I usually have wider spreads that I choose. So I'm going to say, 700 like I had before, and my max loser is say 225. I very rarely put on a trade bigger than that, even when I double up. But that would represent starting at say 23,000. That's what I started at, 23,000. I'm going to put up to 2 positions, but very rarely do I do that. So even that result is randomized and distributed normally and skewed to the percent of times that I actually put on 2 positions. And you'll see that when we go to Trader 2. You'll see here under position size, you'll see 2, 2, 2, 2, 2, 1, 1, 1, 1, 2, 2, 2, 2. So it randomizes it. All right, and let's say that my risk of ruin is 18,000. So if I lose $5,000 under those conditions, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's not going to do it, by the way. There's just no way you're going to lose 5,000 on that few positions. I mean, there are some big drawdowns on some of these instances, but I'm consistently, after 500 trades, more than doubling this account up to about $50,000 after 500 trades. Well, that's exactly what I just did, Victor. I just demonstrated a $23,000 account and trading either 1 or 2 contracts or 1 or 2 positions. And it never had a drawdown where it broke below 18,000, and consistently over time, over 500 trades, which is basically about 2 years. So 2 years, you double your account. And that's I think that's super conservative. That's a 50% win rate with fees included. So I think that's pretty good. And that follows. You want the Excel sheet? I don't recommend doing something aggressive. Believe it or not, you're better off being less aggressive. You're welcome to have the spreadsheet, but I would say I would advise against doing something more aggressive. You can go a tiny bit more aggressive, but not much. So, for instance, on a $25,000 account, I might put the max position size at 3, and then I would randomize it so that the majority of the positions are 1 or 2. And I think that would perform fantastically. That's 36%. No. Oh. All right, so let's try 2 contracts on 6K, right? So we'll do 2 contracts. Let's see, we'll do it over here because I have randomized over here. 6,000, 2 contracts. This one I'll make 3,000. All right. Let's say that this is 650 and never go more than say 190. I think those are good metrics. And we'll make what's the cutoff? I would say that the cutoff will be, if you start with 6,000, make it 3,000. I got to change the scale on this. change the scale on this to 5,000 maybe. All right. 2,000. You want the cutoff to be 2,000, so you can lose up to 3,000 on your up to 4,000 on your $6,000 account. That's pretty aggressive. And 2 position sizes. Let's see how that works. All right. 1, 2, 3, 4, 5, 6, 7. There are some choppy ones in here. 8, 9, 10, 11. Like, look at this one. You go 157 trades and you're back to even, right? But then it takes off. So these are things that you need to consider, you know, in something like this. That it's not all going to be fun and roses straight up. That there'll be some sideways, there'll be some drawdowns, and then some nice climbs. 12, 13, 14, 15, 16. That's pretty good. 17, 18, 19, 20. Wow, no failures. But that's giving it a lot of breadth, I'd say. That's pretty good. Now, if you look at you know, my results, it's very similar, right? So in my results, of course, you know, I've only got 71 trades, not 500, but it's very similar in terms of the results. I have a 53.5% win rate. I think that's a little high. I'll probably end up around 50. My largest winner is $1,100. I did that early on. And my largest loser is 356. Right? And so I've had a max drawdown of under 3%. And these are trades that I took all inside the room. Everyone saw them. I showed my account on every trade. So this is all real life. So the hard part about this is you need to trade the strategy. You know, you have to absolutely trade the strategy. You can't try to make this a high probability strategy. If you do, it's going to fail for you. You just need to go through the process, set up trades with the criteria, place them in the right place according to the volume profile, and it will work out. All right. So I think that's enough. Hopefully that was interesting to you guys. And if you are you a member, Serve and Grow? What if you're struggling picking a direction? There's no struggle. We have a whole analytical method that will show you how to choose a direction. But we don't really choose the direction. We just go with the direction. But we'll show you how to do that. So just email me and I will send you, you know, the simulator if you want. I mean, you've seen what I do every morning then. Every morning I do an analysis of the market. I do scenarios based on that analysis and the volume profile. And then we wait until about 10:30 to see how the market shapes up and then which scenario works out best. Then we choose that scenario. Now this morning that didn't work out, but that's okay. You know, it's just another attempt. We have 5 attempts a week. Yesterday it worked out great. Friday it worked out great. Thursday, let's see what the log says over the past several days. So yesterday was a win. The day before that, a loss. That would have been Friday. Thursday was a win. Wednesday and Tuesday were losses. Then a series of wins. Big. That was big. And some of them were pretty good wins. You know, here's one for 399, 364, 324, 3 days in a row. That really helps. And that's all with one contract. You see that? All with one contract. Now, in the beginning, I had a lot of consecutive losses, you know, but I still have come out on top. And like I said, the important thing is the distribution. This is what you want to achieve. You want to get that good mix of long tail winners. Lots of little wins, some medium wins, and lots of small losses. That's the key. And you want your risk to reward to be somewhere in this meaty area, like I show here, between like 7, 8, 9, 10. I'd say between 6 and 10 is really where you want your risk to reward to be. That seems to be the sweet spot. So you follow that formula, you follow the analysis, you place your trades based on our criteria. You know, we look at the probability of touch on that leading leg, and yeah, it'll work out for you. But you got to be disciplined. Do the same thing over and over. Be ready. Don't overtrade. Don't get too greedy. Just keep at it. And then when you grow your account to a new size, then maybe you can up it another contract. But I would hold off on that for a while until you can see that you're consistently profitable from month to month to month to month. If you can do that, you know, consistently profitable, say 10 months in a row, you know you have something. And then you can, you know, up your trade size and then work into that new trade size. And if you do it another 5 or 6 months in a row, maybe you up it again. But take it slow at first. You want something that's maintainable over years. You know, if you can come out of this and trade 30 to 70% per year, you will be a hero in 5 years. All right. There you go. So we're all set. I want to thank everybody for showing up. We'll be back tomorrow. Have a great one. Peace. Hit that like button. Subscribe. Let's see. Where is that off button? Let's go back to where they head. That camera went off. Those cameras went off. Okay. Bye. Have a good one.